Welcome back to Dinar Trend Tracker channel. Something major is happening right now in the area of international currencies, and people all over the globe are paying notice. There has been talk that two of the biggest banks in the US, Chase Bank and Wells Fargo, have made some suspicious observations. Bank screens within Iraq and Vietnam now provide updated currency rates for the Iraqi Dinar and the Vietnamese Dong. We are talking about concrete numbers here. Iraqi dinars are $5.30 and Vietnamese dongs are $1.395. Despite being unverified and internal, the alleged appearance of these figures, which have long been the topic of heated speculation, has sparked a new round of debate. What these internal data points may indicate for the long-term global financial landscape has been the subject of much discussion and has recently heated up. Any discussion of a possible revaluation of these currencies has so far remained in the realm of theory. Market watchers, analysts and economists have considered a range of scenarios, each with its own set of advantages and disadvantages. Whether or not such a radical change is even possible has long been the subject of debate. The current reports, however, have changed the conversation's tone significantly by implying the appearance of specific numbers within key banking systems. The question of whether it is already started is quickly taking precedence over the more distant one of whether it will happen at all. The community is now dealing with information that, if true, would constitute a concrete advancement, rather than theoretical. And this reflects a significant shift in attitude. It is critical to understand the significance of a bank's internal update. Huge banks and other financial organizations run on intricate, multi-tiered data networks. Not all public-facing exchange boards are identical to the screens seen by tellers or currency department workers. These internal terminals make use of data feeds that facilitate settlement management, software testing, and system-wide update preparation. It appears that the procedure is still not finalized for consumer transactions, as an update is appearing on these systems instead of a public website. Analysts are incredibly curious as to whether these numbers are just a technical test, a holdover from an upcoming upgrade, or the initial step in implementing verified data prior to a public disclosure. It seems that this tale started with some heated debates that have been going on online for the previous 2 days. According to the story, the currency division staff at these banks were the ones who noticed the unusual data initially marked as possible placeholder prices. The new dinar and dong rates reportedly showed up on their internal terminals. The term holding data refers to information that is entered into a system in order to facilitate the push-through of a final, live value, LVMU. It became apparent, however, that these were not isolated events, and the issue allegedly deteriorated from there. The information went from being a mere rumor to becoming a topic of professional discourse within banking circles as reports of the same identical numbers surfaced across various branches. The first and most naive thing to wonder is if this is all just a technological problem. Whereas errors or simulations are common in large-scale banking systems due to their vastness. Never meant for public consumption, banks often conduct internal stress tests or simulations that may include filling fields with fictional data. A rebuttal, however, has been provided by observers versed in currency trading systems. The authors point out that placeholders or test data are frequently just random numbers, such as $1 or $99, intended to ensure a field works as expected. That the exact amounts of $5.30 and $3.95 are not seemingly random is the main point being made. The structure of a real exchange update seems to be more in line with them instead, reflecting estimates that could be made in the event of a genuine adjustment. The participation of two distinct major institutions is a critical component that has provided this tale considerable momentum. There is no mention of any particular bank in the papers. Rather, they assert that two of the most illustrious American banking institutions, Chase and Wells Fargo, were showing the identical updated number. The probability of two separate, rival organizations encountering the same exact technical issue at the same time is taken into account. Market experts consider it extremely low. What has increased the discourse is this reported parallel. The update may have originated from a source outside of both banks, such as a higher-level clearing system that feeds, implying a degree of cooperation or a shared data source, data to other organizations. Before we go, let's be very clear and inject a strong note of caution. These reported rates are not available to the public. Despite the heated conjecture, nobody can just stroll into a bank branch and do a transaction at these new values as of this report. As far as the public can see, the exchange rates have not altered. All talks have focused on purported internal sightings rather than an official, actionable public change, and neither Chase Norwell nor any central banking authority, including the State Bank of Vietnam, the International Monetary Fund, the Central Bank of Iraq, or the United States Treasury, have issued any official announcements or confirmed anything. For those who have been following the possibility of a revaluation of emerging market currencies for some time, this differentiation is crucial. They are viewing this trend through a certain prism. Here, the stated internal screen data is considered as the possible initial noticeable shake. This comparison implies that, similar to an earthquake, a significant change in the financial landscape does not occur suddenly. Subtle gestures and cues typically come before it. Here, the reasoning goes like this. Before the financial system can undergo any modifications, its internal scaffolding needs to be filled up. Prior to making any notification to the public, it is essential to make these behind-the-scenes adjustments to clearing houses and bank systems. The Iraqi dinar is the subject of much debate, and some see this as an early, though unverified, indication of movement. Examining the frequently mentioned economic fundamentals of the country is essential. The vast oil deposits that Iraq owns are a major contributor to the country's GDP. Apart from this, rumors have circulated about its enormous foreign cash holdings. Some say they reach $100 billion, and its expanding gold stockpiles. That the currency's present low value does not represent this tremendous wealth in natural resources is the main argument of those who want to revalue it. Beyond its natural riches, the core argument is that this foundation of assets might theoretically sustain a far higher currency valuation than what is now observed on the global market. The continuation of Iraq's economic reforms is a major plot point. The Iraqi government has made it clear that it wants to update the country's banking system for a while now. Reportedly, among these endeavors have been the enhancement of electronic payment infrastructure, the implementation of anti-corruption measures, and the upgrading of banking systems to international standards. Also worth noting is that the country's debt-to-GDP ratio is still lower than average for its region. Moreover, the national budget has recently received a lot of attention, and some experts have speculated that the 2025 budget documents include language that suggests structural rate modifications. Giving credence to the notion that groundwork for a policy change has been done, the tale extends beyond the dinar. It coexists with the Vietnamese dong, a currency with its own unique history and economic trajectory. In just a decade, Vietnam has gone from a little manufacturing powerhouse to one of the most powerful and rapidly expanding economies in Asia. Its prominence in the international supply chain has resulted in a steady influx of capital from throughout the world. Despite worldwide economic uncertainties, the country's GDP has grown consistently and export volumes have been robust. A lot of people are guessing about its value because of its strong economic performance. Many economists, both in and out of Vietnam, have long maintained that the government has artificially devalued the dong. The same approach to guarantee that its exports maintain a competitive edge in the global market. An enormous change in value is represented by the reported internal figure of $3.95 for the dong. A formalization of such a rate would bring its worth closer to that of other regional economic superpowers' currencies, including that of Singapore and Malaysia. This might be seen as a formal recognition of the Vietnamese economy's genuine fundamental strength. Recategorizing Vietnam as a major manufacturing and export center would reflect its prominence in the global financial system. A change of this kind would not happen by itself, according to experts. To maintain stability throughout the change, extensive regional cooperation and the blessing of international regulatory agencies would be required. The timeliness of the information is one thing that stands out. On these internal terminals, we see that the Iraqi dinar and the Vietnamese dong are displaying data changes in tandem. Assuming it were a random occurrence, observers would find it highly unlikely that two unrelated nations experiencing such a large and concurrent internal data update given their drastically different economies and geographical positions. The coincidences are giving credence to the theory that this is more of a global conspiracy than the work of any one nation. It implies that every possible action might be the first step toward a far more extensive monetary alignment. A basket currency adjustment is a long-standing economic hypothesis that this well-coordinated plan directly supports. So, the most reliable approach to resolving global trade imbalances, according to this long-standing theory among economists, is not to revalue a single currency but rather to adjust a basket of devalued currencies collectively. Here, it makes strategic sense for the dinar and the dong to change at the same time. Theoretically, the supposed sightings are just a sliver of a much broader worldwide effort to level the playing field for international trade and finance by resolving long-standing imbalances in the global exchange rate system. The major yet covert shifts in the global banking system's infrastructure provide credence to these hypotheses. Major institutions have been modernizing their core systems rapidly, according to technical specialists. Immediate settlements and more efficient digital payments across borders are the primary goals of these enhancements. Various examinations of foreign exchange reserves by the Treasury Department, the SWIFT payment network, and the International Monetary Fund's currency stability programs have all been ongoing at the same time. This is the very technical the unseen work that needs doing before a big change in international finance can be securely executed. According to recent announcements made by the Central, these are the fundamentals of the new system's plumbing and electrical. The Bank of Iraq adds another layer of mystery. Officials have verified the new electronic payment system's completion in official declarations. They are also prepared to stop using foreign currencies for trade and process foreign transactions directly in Iraqi Dinar. Words like unifying the exchange rate have drawn special notice from observers who have been paying close attention to these officials' speeches. Before making a big change to their monetary policies, central banks commonly employ this language. And in a remarkable similarity, market watchers have spotted its fairly substantial emergence in official language. Similar actions have been taken by the State Bank of Vietnam. It is noteworthy that Iraq and Vietnam have been making these complementary announcements and technological advancements within the same general timeframe. Iraq has recently rolled out upgraded digital frameworks for its banking sector, with a specific focus on aligning its systems with IMF standards. Analysts in the field of global economics typically view such scheduling coincidences as possible proof of collaboration, rather than accident, when two distinct governments are both pursuing identical IMF-aligned upgrades. This indicates that the two countries are coordinating their efforts to meet a single deadline, even though anticipation is growing. By providing a useful parallel, experts are highlighting the importance of perspective. Long before they go live, bank screens might show pre-launch figures. Just like when a brand new website is live and accessible on a private test server or in development mode, this is how it works. The data is there, and the code works, but nobody can see it. You can't click the trade button just yet. What the bank employees might be seeing here is the last round of testing before activation. There have been no real consumer transactions as the data was dormant while it was synchronized and confirmed throughout the live internal network. Experts in global finance caution that switching currencies on a massive scale does not happen instantly. There are intricate processes that progress via clear stages. According to the current reports, the first step is always to synchronize data and conduct internal testing. Banks and central banks would presumably test the new rates through large volume internal exchanges to ensure conversion correctness in the next phase, which would entail private institutional settlements. The third phase, a public announcement and exchange availability, will only take place if these stages are finished and all systems are confirmed to be stable. Keeping expectations in check in the face of the recent upsurge of optimism in online communities that have tracked this topic through numerous false alarms requires an understanding of this sequence. Logic is being pushed by seasoned experts. They make the argument that verification, not speculation, is the basis of the global financial system. An unnamed internet remark or urban legend will not constitute a verified turning point. A succession of remarks will be made in a coordinated, formal, and transparent manner. Official institutions such as the State Bank of Vietnam, the Central Bank of Iraq, the International Monetary Fund, and the United States would make these pronouncements. Government funds. Staying calm and maintaining a healthy skepticism towards unsubstantiated claims floating around high finance is the best course of action until formal verification happens. In many cases, a public remark is more illuminating than an unusual lack of response from prominent institutions. Banks and other financial organizations have been noticeably silent as of late, according to observers. In and of itself, this silence is occasionally taken for an indication of motion. Strict communication bans are frequently enforced by banks when they are nearing the completion of a big system update or data installation. Doing so guarantees that verification tests are carried out free from market interference, and helps to avoid the spread of false information. Some people think this pattern perfectly describes the present low activity, which could mean that important introspective work is taking place. Verification and formal recognition of these reported internal rates would have far-reaching consequences for economies around the world. Major commodity contracts, especially oil, which are priced in US dollars, may necessitate quick rebalancing. The purchasing power of people in the Middle East would be drastically affected by a stronger dinar. Similarly, a more robust yuan would rethink Asian manufacturing supply chain costs and import-export agreements. The long-established status of the US dollar as the principal currency for international trade settlements may be affected by this, something that has been argued over for decades in the world of financial policy. One reason why such a massive change is more doable now than in the past is because of technology. Something has changed in the financial world's framework. The hazards traditionally linked with quick value changes have been greatly diminished by instant settlement platforms, ledgers confirmed by new technology, and compliance systems driven by artificial intelligence. Such a massive occurrence might have generated a systemic shock and possibly triggered a market panic a decade ago. Modern algorithms can recalculate millions of accounts in a matter of seconds, no small feat. Institutions may feel comfortable enough to test in the wild because of this technical safety net. Prior to making any public announcement, high-value rates internally consider a considerably broader, almost philosophical, picture than is apparent in the technical fact. A coordinated global realignment of currencies may be on the horizon, according to some who are interpreting these developments. Many developing nations' currencies, according to their claims, have been grossly undervalued compared to their GDP for quite some time. A coordinated effort to reduce trade imbalances may be spearheaded by two countries with abundant natural resources, Vietnam and Iraq, and their respective contributions to the global economy. To do so would be an act of willful pursuit of equilibrium. In a world where global power relations are being reshaped due to financial valuations that have not accurately reflected economic reality, what does this mean for people who have been following this narrative closely? At this time, the consensus among experts is to observe rather than take any kind of action. The safest bet is to keep an eye on announcements made by official channels, all relevant national central banks and reputable long-running financial media sources. Verifiable documents and coordinated announcements are always present when there is a change in genuine policy. There is hope in the numbers that are flashing on the bank's internal screens. $5.30 for the dinar and $3.95 for the dong. Until formal announcements are made, it is recommended to keep vigilant, informed, and steady as the story enters a critical phase.